What's happening is nature, gravity. So 10-year Treasury yield should historically and theoretically be equal to nominal GDP. Real economy's been growing better than 3% now for about a year or so. Inflation's running 2, maybe a little bit more. So history would say that 10-year Treasury yield should be 5.5. They've been held down at lower yields long after the crisis ended because of a bunch of extraordinary policies. And I suspect what happened yesterday is a little bit of gravity.
Yesterday, we talked about the comments that Jay Powell made, and along with what we just played for you, he also said that we're a long way from neutral and that you can expect the Fed to keep raising right through neutral and beyond. That to me was a little different than what I had anticipated or what I'd heard in the past from him.
So it's a little different than what I read of his speech the day before, right. And it's a little different from the statement from the FOMC, say, the week before. So I don't really know what caused it, but my own judgment is we don't know what neutral is. This is useful fiction, the neutral Fed funds rate, the neutral real interest rate. 10 years after the fact, we might be able to assess what neutral is. So I find it a little bit off-putting that we somehow are setting policy based on this theoretical rate.
What does neutral mean? I mean, I thought maybe 3% was it. If you're growing a GDP at 3%, I kind of assumed that was neutral. But what do you think it is? So again, we don't know. Historically, we define a neutral rate as monetary policy that is neither restrictive nor accommodative. If you look at financial market conditions today, monetary policy, even after the move up in yields yesterday, looks about as loose as it did 10 years ago. So that doesn't exactly feel neutral to me. I view this whole discussion about neutral and what's this proper R-star rate as really just a proxy for productivity. And we in economics are terrible forecasters of what productivity is going to be. So it strikes me the discussion around neutral is way overstated. And frankly, I was comforted by statements a week ago from Chairman Powell at his conference, from John Williams, that after talking about neutrality for a couple of years said, let's cast it aside. So I hope it doesn't become central to policy making.
What are economists good at predicting?
How things were in the last economic cycle.
It's Yogi Berra was right. They're very hard predictions, especially about the future.
Right, but what shouldn't be quite as hard is what's happening outside of our window. And if you look outside of the window, not just here in New York, but across the country, the U.S. economy has been booming since last spring. It's only found its way into the front pages of the newspapers in the last few months. But we should be pretty good about contemporaneous indicators. What are we seeing? A year ago, the Fed and most forecasters said the economy this year would grow at around 1.8%. Right. Now, 9 and 12 months later, they've been mugged by the data. The latest Fed forecast says 3.1% growth this year. And the truth is, by the time we get to December, I think they're going to have to mark up that forecast yet again.